All right. Today is Wednesday, December 21st. This is a recap for the stock market activities today. And folks, I got a good one for you tonight. And let's start by this. You enjoying the Santa Ratty? You asked for a Santa Ratty. Here's your Santa Ratty. The bad news is Santa is going to take it all back. And then some, so enjoy it while it lasts. But here's what I want to talk about today. You might be already familiar that I've been traveling a lot as of late, and last Sunday, after a long day of work, late at night, I decided to go to the movie theater and watch the new movie Avatar 2. And of course, if you're going to watch Avatar 2, you're going to pay the 3D top package, and along with that comes a massive cup of soda and a giant bucket of popcorn. And of course, you're going to pay an arm and a leg, billion, gazillion, trillion dollars just to watch Avatar 2. And to my surprise, the movie theater was pretty much empty. And again, this is just my anecdotal evidence. I'm not saying the movie theater business is going down. I'm not saying that Avatar 2 is a box office bomb. I'm not saying any of that. I'm just sharing my experience. So I get to the movie theater, I put my glasses on, eating the big bucket of popcorn and slurping that soda, and then about 10 minutes into the movie, I fall asleep. And then I woke up later by the cleaning staff who informed me that the movie is over, and there was popcorn all over the place because I dropped the bucket of popcorn. And I'm like, what time is it? It's already been over 3 hours past. I've been asleep for about 3 hours and I missed the movie. But the bottom line is the theater was empty. So I'm thinking, hey, maybe this Avatar 2 came a long time ago and I haven't heard about it. But it turns out that this was the opening weekend at the box office for Avatar 2. What a disaster it was. Could it be a sign that the economy is slowing down massively? This is what we're going to explore in tonight's program. So here it is, in focus tonight. A high bar, and I'm being nice here. I'm not calling it a box office bomb because I could be wrong. But the leading indicators don't look pretty good. And this high bar set by these movie studios is blowing up right in their faces. And we're seeing the stocks of media companies crashing in real time. But let's back up for a little bit because it appeared, at least in the summer, that the movie theater business is coming back like never before. And the reason is Top Gun Maverick, which smashed all box office expectations. And of course, years from now, we're going to have studies on why this movie was such a success. I mean, I'm not a movie theater kind of guy. I don't go to the movie theater anymore. But Top Gun Maverick pulled me over there. And I know what you're going to say. You're going to say you're biased, Maverick, because your name is Maverick. Your channel name is Maverick. Of course you watch the movie. Actually, the name of the channel was inspired by a manager I used to work for who called me the Maverick of Wall Street. But I did watch the movie anyways. And a lot of folks did. And it turns out to be a massive box office success. Could it be the feel good about the movie? Could it be the patriotic theme? Could it just be the timing? Could it be Tom Cruise? Who knows? But we're going to study the success of this movie years from now to figure out why the movie was such a hit. But since Top Gun Maverick came out, it has been a downhill for the domestic box office. Bomb after bomb after bomb. Not because the movies are underperforming historically speaking, but because the bar was set so high. These movie studios spent an arm and a leg in producing these movies. And apparently something changed about the movie business and we're not seeing folks attending anymore. But then you have Top Gun Maverick. Or is it because the economy started to get worse and inflation started to bite? And hence, a lot of folks cannot go to the movies anymore. Take, for example, Black Adam. This is coming from Warner Brothers, which, by the way, the stock is in the trash right now. But this was a massive box office bomb. And here's the surprising part. Black Adam has hardly been given a hero's welcome in the box office run, generating just $387 million globally after 7 weeks on the big screen. Now, you look at the number, $387 million, that's a hit. Historically speaking, that's a massive hit. But here's the problem. That may seem like a lot of coinage, especially in the Thing times, where movies out of all shapes and sizes are struggling to reach pre-Thing grosses at the box office. But Black Adam, a comic book adventure starring Dwayne Johnson as a villain who once promised to change the hierarchy of power in the Warner Bros. DC universe, did not come cheap, costing $195 million to produce. And a big-budget movie led by Johnson, one of the biggest movie stars in the world, who plays against type here as a murderous anti-hero, requires a worldwide marketing spend of $100 million according to sources. And of course, this budget was scaled back to $80 million. But all in all, as a result, the film needed to earn around $600 million worldwide to break even and to surpass that lofty benchmark to turn into profit. Yet box office experts believe Black Adam will stall out with less than $400 million globally. And indeed, it's less than $400 million right now. So we don't have to read the rest of this crap. The bottom line is, even with the movie earning $400 million at the global box office, that's not enough because the bar was set too high. And now Warner Brothers ended up holding the bag, and therefore the stock is crashing. Not to mention the CNN disaster, of course, but that's a different topic. And of course, now The Rock, Dwayne Johnson, confirms that Black Adam sequel is kaput. Not gonna happen after the massive bomb at the box office. And here yet we have another one, perhaps the biggest one of them all. Avatar 2, The Way of Water opens to $134 million, just missing box office expectations. So again, an opening of $134 million, that's a hit in regular times, but not in these days, because the bar has been set too high. Or, again, you got the case of Top Gun Maverick. Is it because the economy is slowing down tremendously and folks don't have the money to spend anymore in watching this crap? When we talk about the bar being set too high, according to director James Cameron, who's a delight to work with, and I say that sarcastically, of course, but according to him, the movie needs to earn $2 billion at the box office to break even. Wow. And therefore, an opening of $134 million, while on face value appears impressive, not impressive when you realize that the movie needs to earn $2 billion to break even. Therefore, it's not a surprise that Disney stock has been dropping down big time, and the stock is now in its worst year since 1974 after the disappointment by Avatar. Now, we understand why the Chinese box office is not doing pretty good. For example, the movie bombed at the Chinese box office, earning only $57 million. But we know we have the thing lockdowns over there. What is the explanation of the domestic box office bomb? Because if you say, hey, $134 million, that's pretty impressive. Again, you have the case of Top Gun Maverick. You have the case of Black Panther, for example. Why is Avatar not doing pretty good right now? Could it be because the advertising was not that good? I mean, a lot of folks assume that Avatar 2 has been released long time ago. Even Edie Falco, aka Carmela Soprano, she also thought that the movie was released long time ago, and it bombed at the box office. That's why nobody heard about it. Or could it be that Avatar tends to be a slow earner? It doesn't impress right away, but it takes a while before reaching its target. The last time around, Avatar 1, I guess, the opening was not that impressive. But again, Avatar was not an established brand. It was not an established movie. So it took the word of mouth before it got out and it became the top grossing movie of all time. But this time around, the brand is already established. Folks know what Avatar is. It doesn't need the word of mouth anymore. So again, is this the reason behind the lame opening? Could be. Or could it be that the movie is so thrilling it causes you to have a heart attack? Could be. I mean, who wants to have a heart attack? Nobody. Could it be because the culture has changed? Nobody wants to watch movies at the theater anymore. Most people prefer to stay at home and stream the movie instead. I mean, James Cameron said this: the market could be telling us we're done in 3 months, or we might have to be semi-done, meaning, okay, let's complete the story within movie 3 and not go on endlessly. Because remember, Disney's planning Avatar 3 and 4 and 5 and 6. And with this reaction at the box office, all of these plans could be scrapped. Cameron says, if it is just not profitable, we are in a different world now than we were when I wrote this stuff even. It's a 1-2 punch, the pandemic and streaming. Or conversely, maybe we'll remind people what going to the theater is all about. The film definitely does that. Well, I went to sleep when I went to the theater and watched that crap, so I don't know what he's talking about. The question is, how many people give a shit now? The answer is not so many, and that's the big problem. But again, we talked about, could it be the fact that Avatar was not advertised properly and nobody heard about it? Could it be that the bar was set too high and thus explaining the box office bomb? Could it be because Avatar takes a little while before it picks up? Could it be because it causes heart attacks and nobody wants to have a heart attack? Could it be because the culture changed altogether and now everybody prefers streaming over watching movies in the theater? Or could it be because the movie just sucks? You got this, I believe, a Harvard graduate writing for Forbes, and he says, Avatar 2, The Way of Water review. A major disappointment, bro. That's from Harvard. And you can read this stupid article if you want, but the bottom line is, he thinks the movie was not really that impressive. The movie was too long. The format was awful. The graphics were kind of a video game look like. It didn't feel like a real movie. Or could the slowing economy that's about to tip into a recession the reason why Avatar underperformed in the domestic box office? I mean, when you think about it, look at U.S. credit card balances up 15%, the highest annual leap in over 20 years, as Americans fall deeper in debt. And U.S. consumer loan delinquencies and now surging to 13-year high. Why is that happening? How about inflation? Inflation is costing the average American $717 a month. That's extra. So when you're spending on inflation, when you're spending more at the gas pump, at the grocery store, on rent, on utility bills, can you really afford to take the kids to the movies anymore? And could this be the real reason behind the disappointment of Avatar 2 in the domestic box office? Let me know in the comments. Because if this is the real reason, then we're going to see a trend here. And it's not going to be good for all of these movie studio companies. All of their stocks, Disney, Warner Brothers, Paramount, all of these movie studio stocks are going to start to crash because they have all of these projects on the pipeline that they spent hundreds of millions of dollars to make. And apparently, they're all going to bomb at the box office, or they're going to have to settle to releasing them on their streaming services, aka effectively for free, and therefore hundreds of millions of dollars flushed down the drain. Something to think about. Is it the beginning sign of the upcoming recession? Once again, let me know in the comments. But for now, moving on to the coverage of the stock market, we begin with the closing of the indices today. And here we go. Well, Santa is in town, baby, and he's giving you a relief rally for now. The Dow Jones Industrial Average is up by 526.74 points, or a gain of 1.60%. The Nasdaq in the green by 162.26 points, or a gain of 1.54%. The S&P also in the green by 56.82 points, or a gain of 1.49%. When it comes to the sector's performances, green across the board, we're not going to shame any sector here. Yet coming up number 1, capturing the gold medal, energy. At number 2 for the silver, industrials. Number 3 for the bronze, technology. No theme today. The tide that lifted all boats, the oversold rally, the Santa rally, the bullshit rally, whatever you want to call it, doesn't matter to me. And here's the advance to decline ratios. NYSE 83% advancing versus 16% declining. The Nasdaq 69% advancing versus 29% declining. When it comes to the futures, commodities, yesterday we talked about how when the dollar goes down, in reaction of the Japanese yen moving higher, commodities are going to appreciate, and that's inflationary. Actually, it's stagflationary. You have commodities prices moving higher, but we have bombs at the box office, an indicator of a recession, an awakening consumer, the worst outcome of them all. Stagflation. And today was a massive upside day for energy commodities, the WTI gaining almost 3%. And so did Brent oil. Meanwhile, gasoline RBOB up by almost 1.75%, heating oil up by almost 4% for the day, and natural gas with a rebound worth about 3% today. When it comes to softs, the majority in the green, but led by cocoa futures, with gains of around 1.5%, the laggard, OJ, down slightly by about 0.25%. When it comes to metals, the dollar was pretty much flattish for the day, but again, there is downward pressure on the US dollar by the Japanese yen moving higher, and therefore metals were pretty much flattish for the day, although some to the downside, including platinum and palladium down over 3%, and the precious metals, gold and silver, pretty much flattish for the day, while copper eking some gains here, worth about 0.5%. When we talk about meats, live cattle futures moving higher by about 1.25%. And by the way, do yourself a favor and pull up a chart of live cattle futures and tell me that this is peak inflation. Tell me that inflation is over. Likewise, feeder cattle futures with modest gains worth about 0.5 percentage point. In the meantime, the new big tech lean hogs with gains worth about 5.5% for the day. When it comes to grains, we have some gains here led by oats futures worth about 3%. Followed by wheat with around 2.25%, and then corn futures moving higher by a little more than 1.5%. The rest, some gains here and there, some declines, but the bottom line is, today's action in the commodities market was inflationary. So watch your back when you say that inflation is over. Moving on to the big casino, the options market, what's going on here? The volume moved higher for the top 3 names. But again, traders are using the opportunity for pop to short the rip. At number 1, the hottest stable by far, Tesla, the souffle, which stopped melting at least today, even though we have some bad news Regardless, the volume was over 3 million contracts traded today. About 56% of those were puts. At number 2, Apple, with around 1.8 million contracts traded today. About 60% of those were puts. At number 3, Amazon, with around 1.7 million contracts traded today. Look at this, about 80.5% of those were puts. No faith, no confidence here that this Santa crap rally is going to last. Now, the other thing I want to bring to your attention is the IV rank. Look at Nike. Yesterday, we were talking about the IV rank almost in the 70s. Now the IV rank dropped off the face of the earth down back to around 23.5%. What does that mean? If you bought call options on Nike yesterday and you woke up today with the stock popping higher, double digits, yet your call options did not appreciate at all, it's because of the implied volatility. It went down big. So again, the point being here is when you see the implied volatility out of whack, moving way higher, it's an opportunity to use credit spreads to capture this credit by selling the upside calls or the downside puts. Because once the move is out of the way, and we see the implied volatility dropping in a big way like we're seeing right now in Nike, if you use the opportunity in selling these credit calls or credit puts, you made an insane amount of money. We're going to talk more about option strategies in another video, but for now, moving on to the unusual activities that took place in the options market today, we begin with the ticker ARKKKKKK. For Tesla witch Cathie Wood, which is, by the way, it's just a matter of time here before Mama Cathie blows up. But until that happens, somebody sees more upside coming for RKKKKK. And they bought the 37 calls for the expiration date February 17th with expectations that the name could gain more than 13% by then. They paid around $1.25 a piece to enter this trade, all in all spending around $3.75 million. And then what about the trade for the ticker DAL Delta Airlines? The stock is moving higher on Wi-Fi optimism, more on that on the heat map analysis, but somebody's betting for more gains to come. And they bought the 37 calls for the expiration date February 17th. With expectations that the name could gain more than 10% by then, they paid around $1 a piece to enter this trade, all in all spending around $1 million. And then what about the trade for the ticker BA Boeing? Now this name has been on fire. I attempted to short the name, and I ate a pie in the face. The reason why Boeing is outperforming, due to the dollar moving down. International companies tend to do better when the dollar goes down, and therefore somebody sees more gains to come. And they bought the 245 calls for the expiration date March 17th, with expectations that Boeing could shoot up higher by more than 25% by then. They paid around $2.30 a piece to enter this trade, all in all spending around $2.5 million. And then what about the trade for the ticker FMX? This is a Mexican conglomerate company. Mostly they do the distribution of Coca-Cola, and somebody sees big upside coming for this name. And they bought the 85 calls for the expiration date March 17th with expectations that the name could move higher and gain more than 9% by then. They paid around $2.20 a piece to enter this trade, all in all spending around $1.8 million. And then we have a call spread for KMX, CarMax. The name is reporting earnings tomorrow, so this is an earnings play, and they're doing it the right way. They're using call spreads to minimize the risk here. And in this case, they bought the 62.5 calls and they sold the 70 calls, all for the expiration date December 23rd, meaning this Friday. Therefore, this is a short-term earnings kind of play. The expectations are that CarMax will move higher by more than 5% by the expiration date, but not more than 18%. And they paid around $2.50 a piece for the 62.5 calls, and they received in credit around 50 cents a piece from writing off the 70 bucks calls. All in all, the entry cost is reduced to around $2 a piece, which brings the total all the way to $1 million. Good luck. On to the heat map. What do we see here? Here comes Santa, green across the board, the tide that lifted all boats, with very few exceptions. It's an algorithmic trade. Most traders are out now. They did all the selling that they can do, and now they left it to the algos to pick up from here. And the algos picked up on oversold conditions, and there we go, we have a bounce. Which, by the way, not gonna last, but let's let the good times last, at least for now. Now, the notable outperformer, and perhaps the catalyst behind today's rally, besides Santa Claus, is Nike. And folks say that the results from Nike were impressive. Bullshit. Their margins are actually going down. Nike popped higher because the implied volatility was really high. A lot of folks bought call and put options ahead of time, which increased the implied volatility big time, and therefore the oversized reaction by the stock, which by the way gives us the opportunity to buy some put options in the long run for 2023 because the gap that opened today will be closed. In the meantime, we have news from Netflix regarding Nike because the streaming giant is about to show Nike training club classes next week. This is what Netflix is going down to right now. They cannot produce good movies anymore, good TV shows anymore. You get once in a while, once a month, you get a good movie or a good TV show, and then what? You freeze your membership. But Netflix now says you're not going to freeze the membership. We're not going to allow that to happen. And they're going to keep you waiting for the next good show to come by offering Nike training club classes. Good luck. And then we have news from 3M, which in a nutshell will stop producing this forever chemicals known for causing cancer. But according to the spokesman, they're going to continue to produce all of these products that causes heart attacks. Anyways, we have news for Delta Airlines, which now reportedly offering free Wi-Fi on flights in early 2023. Yay, finally, we're getting some service here. We're getting free Wi-Fi at least. Isn't that good? But here's the catch. You have to be a paying member. You have to buy the Delta membership before you get free access to Wi-Fi. Oh, how generous of them. Anyhow, moving on to the daily heat map for the ETFs, a sea of green across the board with very few exceptions. And the gains were led by commodities, be it energy commodities, the XOP, XLE, OIH, USO blasting higher. It was even a good day for uranium bulls. URA moved higher big time. Solar bulls, TAN, the ticker TAN, is also in the green. No major contrast between growth and value. The majority of international ETFs in the green. What to complain about here? Santa has come to town and he's going to give you a little bit of gains and then take it all away and deliver the bags. In the meantime, let's do some charts analysis here and then send you on your way. We start with the SPY, the S&P 500 30 minutes chart. What do we see here? We talked about finding some ground. The bulls found some ground at around 379.5. The bears thought that's enough before Christmas. They booked profits. And the bulls thought, hey, let's catch some rally here before we get to Christmas, and therefore we have the pop, which got us above 385. Now that's support, and the chart is forming a bull flag pattern, indicating more gains to come. Another way we can look at it, how about a cup and handle formation? It doesn't matter how you look at it, the formation for now is bullish, indicating that perhaps we have more gains to come all the way until the end of the week. If we do, we have resistance at around 391. But here's the problem for the bulls. When we look at the daily chart for the continuous contract, the S&P 500, what do we see here? Negative divergence of the RSI and still negative momentum on the MACD indicator. And yes, while the bulls maintained 3,855 as support for now, what if the Santa Claus rally is just a B leg in an ABC pattern, which will take us down to lose 3,855 as support again, and perhaps get us all the way down to 3,720.5, or even beyond that, to the June bottom of 3,600. Moving on to the Qs, 30 minutes chart, what do we see here? Similar story with the SPY. It found some ground at around 269.29. The bears booked profits. The bulls jumped in. And we have now a bull flag consolidation pattern indicating more gains to come. Another way we can look at it, once again, a cup and handle formation. The 30 minutes chart leads to more gains to come. But here's the problem again for the bulls waiting for a Santa Claus rally to last. When we look at the daily chart for the continuous contract for the NASDAQ, yes, we have a rebound from the June bottom at 11,058.5, but we have a negative divergence on the RSI, negative momentum on the MACD indicator. What if this is, yet again, an ABC pattern? And down we go. How about the IWM, the Russell 2000 30 minutes chart? Yesterday, we talked about a reverse head and shoulder formation for the IWM. And today, we got the pop, which got us above 174.22. Now that's support. If the bulls close above this number by the end of the week, that would be a victory for the bulls because it gives them the hope that at least the Santa Claus rally could last all the way till the end of the year. But for now, it is a bull flag pattern. And the next resistance we have is the gap support, now resistance. That would be soft resistance, but the actual resistance would be at around 183. I doubt that the IWM is going to make it all the way there before the end of the week or even before the end of the year. But anyhow, what about the dollar? A daily chart, what's going on here? In positive momentum in the RSI, the MACD indicators. The problem is it's having a hard time catching a bid. As if everybody's assuming that the dollar is done here. And despite the catalysts being the FOMC coming out hawkish or the BOJ, the dollar is finding a hard time popping higher. And the question is, do we have any more catalysts coming before the end of the year? Not that I can see, besides the technicals for now. So if the technicals are not enough for the dollar to move higher, down it goes, and that was that for the pop for the reversal in the negative momentum in the hour side, the MACD indicators. Sometimes the reversal in these indicators from bearish to bullish or vice versa doesn't mean that we're going to see a sizable move. It could just mean that we're going to see some consolidation before the primary moves resumes. Although for now, I'm still assuming that the dollar has yet another pop to go before it moves down again. And if that is the case, look at gold. Flattish for now, not doing anything at all, but it's still, technically speaking, in negative divergence in the hour side, the MACD indicators. My assumption for now is, once the pop happens in the dollar, gold will go down momentarily before it finds ground, the dollar reverses down again, and gold pops higher. So it is entirely up to you if you want to open a position in gold or not right now. If you don't believe that we have yet another pop in the dollar, you might want to hop in right now. But what is the harm in waiting here? What is the harm in waiting for some sort of a confirmation? On to UK oil, Brent oil. What do we see here? A daily chart. The ABC pattern is on track for now. It's going to face some hard time passing 85 as resistance, but if it does by the end of the week, that would be a major victory for oil bulls. When we look at the weekly chart, it is still in negative momentum, both in the hour side, the MACD indicators. It is still below 85, but a crossing above 85 by the end of the week could change the negative momentum, at least from a weekly chart perspective. What about the daily chart for the 10-year yield? It is stalling for now, but it is in positive momentum, both in the hour side and the MACD indicators, meaning perhaps we have more gains to come. What if the 10 years consolidating for now, forming the famous cup and handle formation before it moves higher again? In other words, when we look at the TLT, a daily chart, yes, it is at support for now, but it remains in negative divergence, both in the hour side and the MACD indicators, at least in the daily chart, meaning it could go down all the way to 100.28 before it finds support at that point. What about the VIX 4 hours chart? Look at this. It's back at 20 as support once again. The bear flag is playing out. And the question is, will the VIX lose 20 in a Santa Claus rally? And would that give the market the false sense of security? Why am I saying that? If we zoom out to the daily chart, look at this. We have negative momentum on both the hour side and the MACD indicators, pointing out that perhaps 20 is not going to hold. And if that is the case, you're going to hear all of these pundits on TV saying, look, the VIX is below 20. We have a Santa Claus rally. The soft landing might be a real possibility at this point. Here's the problem. When we zoom out, it's a daily chart, still the same. Look at what happened last year. The VIX went down by around 41% in the so-called Santa Claus rally. And then we all know what happened. The bear market, the crash, and the VIX popped significantly higher. In other words, if the VIX goes down below 20, it would be an opportunity for bears and shorts alike to bet against the market at a cheaper price. And it would be an opportunity for longs and bulls to hedge their portfolio at a cheaper price. Apple, 30 minutes chart, what do we see here? We got the pop. The chart got really oversold. It found support in no man's land and it popped higher, forming a bull flag pattern. And it is now trading above 134.37. And perhaps we have more gains to come before the end of the week. And it becomes really important where the weekly closing is. Are we going to see a flush down by the end of the week? And Apple loses 134.37. If that is the case, then this would be a major victory for the bears because it comes as a confirmation that Apple has not found a bottom here and the bottom is ways to go to the downside. Perhaps Apple would be below 100 in 2023. But a closing above 134.37 by the end of the week will give the bulls some hope that this rally could continue all the way till the end of the year at least. Tesla, the souffle daily chart, again, we're waiting and waiting for a pop. And my number is 130.77, but we could see the chart popping before that. It's just kind of peculiar for me that in an upside day, all in all for the market, Tesla is finding a hard time moving higher. What's going on here? It is oversold. It's due for a pop. But are we seeing mass liquidation here? Mass exit? Perhaps Elon dumping more? Perhaps margin calls are hitting and preventing the stock from rallying even in these oversold conditions? That is certainly possible. But if you believe in the technicals, you know that there's a pop coming. Is it smart to buy some call options ahead of time? The answer is yes, it could be. And it is a reasonable assumption if you buy with the expiration dates of January or February. And perhaps you use the opportunity of buying call spreads, be it calendar spreads or debit spreads. It doesn't matter. Because when we look at the weekly chart for Tesla, the range of 130.77 is very strong support / resistance in the past. And the expectations are, yes, we have a head and shoulder formation, really negative for Tesla, but it is oversold and it's about to hit a reliable level of support from which we could see a rebound. Now here's the problem for Tesla. When we zoom out to a more important chart, the monthly chart, what do we see here? It is not oversold and the momentum is accelerating to the downside. So even if we find support here, who's to say that we might see a pop and then a flop and Tesla loses this support range and it goes all the way down to the next support range, and that would be a downside from this point on of at least 70%. Now look, this is an extremely bearish outlook, and it's not going to happen because Elon and Twitter fiasco. It's going to happen because we have a fundamental piece of news indicating that the growth story in Tesla is over, and perhaps we're getting there. Today, for example, we got the news of a hiring freeze and more layoffs in Tesla. Business slowing down, problems in China, consumers shunning Tesla because they don't like Elon anymore. Any of these reasons, if they translate in numbers in the next report, this extremely bearish outlook is within the realm of possibility. So keep that in mind. And lastly, Bitcoin, the daily chart for tulips. What do we see here? No update, nothing happening here. It's a bear flag consolidation pattern. If it continues, down we go to 15,000. And lastly, moving on to the conclusion of this video, what do we have on the economic calendar tomorrow? We have initial jobless claims along with GDP data, and that comes hand in hand with the Chicago Fed National Activities Index and leading economic indicators. And with that, folks, this is all I got for you for tonight. Thank you for tuning in, thank you for listening, thank you for watching, and I will talk to you again tomorrow. Good night.
Oh, please, Jim. Please, Jim. Please. He's so cute. I like him so much. And I would do it, but I'm too shy. Please, Jim. Please.